Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. It is Sunday, August 18th, and I wanted to give an update on my seven open buy recommendations that are acting very well. I have closed out a couple positions, namely utilities and AbbVie, symbol ABBV, because they reached their price projections based on the patterns that I follow as a market technician. So I wanted to give you a quick update on the seven open positions. So let's get into it. This is a big chart of the Shanghai index. This goes back to 2008. So this is a monster symmetrical triangle. And you can see that we're right down near the support line of that triangle. And I initiated a buy recommendation back here in early 2024. I think it might have been April or so. And the potential here is enormous, at least 4250 on the upside. But it's got to hold above our stop here. So at about 2600. So anyway, that's where we're at on the Shanghai index. This is a monthly chart. Each one of these bars represents a month of price action. I wanted to give you this big picture on the Shanghai as to give you context of where we are in the big scheme of things. So let's drill down and look at the last couple of years. And we're going to look at FXI, the iShares China Large Cap ETF. And what got me interested here is that prices were able to break out of the downward sloping bearish channel, these two red parallel trend lines. And the other thing that got my attention was a five-wave up here, pattern here, motive waves going five waves, which we had here in our first wave up. That suggests that the trend is up. And on the way down, the correction was a three-wave pattern. So that tells me it was corrective. If that is correct, according to the Elliott wave theory, we are in a third wave here. And third waves are the biggest, the most profitable, and the most intense. And so if this is a third wave, we need a new high here because we have one, two, three, fourth wave correction. Here's my stop. One of the cardinal rules of the Elliott wave theory is that the fourth wave doesn't enter the first wave. We had a slight entrance intra-week. Each one of these bars represents a week. This is a weekly chart, but it's really minimal. So the setup here is for another high, and then we get some sort of corrective pattern, and then another high and a corrective pattern, but the trend would be up. The other pattern that I see developing here possibly is a possible inverse head and shoulders pattern with the left shoulder, the head, and now the right shoulder. And if this does work out, the symmetry is really good with both shoulders being about equal. And so I like this pattern. It was really impressive that it was able to hold. And right now, your reward to risk is really big because if it gets down much below 25, you're going to get stopped out. You'd want to take your loss, and the potential upside is really pretty big. So that's FXI. It looks great. Had a good week, up 3.5%. And again, this reversal at our stop was impressive. GDX, gold miners. Again, this looks great. You could say this is a symmetrical triangle. There's a resistance line, support line. I'm using the inverse head and shoulders pattern here. It gives you a little less of an upside price projection. I like to err on the side of being conservative on these price targets. And the symmetry on this inverse head and shoulder, left shoulder, head, right shoulder, looks really good. and we got a breakout, and then we got a correction. It held the neckline on our inverse head and shoulders pattern. We were able to raise our stop a little bit, got a nice up thrust, and then we got a correction, a little bit of a pullback, and now you can see we had a really big up week, up 7.5%. So gold miners looks great. Our price projection is 50. There's a lot more upside, and so this is intact. It looks great. TLT, this was a call on fixed income back a couple of months ago, and when everybody thought rates were going higher, and interest rates were going higher, meaning bond prices would go down. The chart said no, interest rates are coming down and bond prices are going up. So it was a very contrarian call. That's a great thing about technical analysis. It's not a bunch of talking heads making things up. Anyway, here was what got the big scheme of things that I've shown in previous videos. If you go back to fixed income, any of my YouTubes, you'll see the long-term picture of TLT. I'm using the 20-year Treasury ETF, but this initial small inverse head and shoulders pattern suggested 100. We got up to 99.93. How good is that? Pretty good at showing getting to its objective and giving you a forward-thinking price projection. And as we were going up into this top, I was saying, sell some on these big weeks, big days, these big gap ups and then big bars. And, you want to sell some because nothing goes in a straight line. And we got these two massive people jumping in, people that thought rates were going higher. All of a sudden, they turned course, of course, right at the wrong time. They were chasing. And as I was selling, they were buying. And this kind of stuff shows you that people are overzealous on it. And on my YouTube, I said, I'd be selling into this strength because we're going to get a pullback, which we did. And of course, I'm buying on these dips. And I hope you were too. That's what I was suggesting in my channel. You really should like and subscribe so you get some insight into this. You can make so much more money than just buying and holding. And so here we are. This actually, normally I wouldn't buy back if this was it, 100, and it hit 100. I'd be have a minimal amount in that position, similar to utilities currently, which hit their price projection. But this has morphed into something bigger, and I talked about this when I initiated the position way back a few months ago. Now we have a larger inverse head and shoulders pattern. This covers over a couple of years. And the price projection based on, if you measure from the bottom of the head to the neckline and project that distance upward, it goes to 115. So the small little inverse head and shoulders had 100. Now it's dwarfed into something bigger. The price projection is 115. And so, again, it looks good. Another recommendation that's worked well. REITs. This was one of my more recent buy recommendations, and this is the REIT index, IYR, iShares. It's an index that's got many, many REITs from different sectors, and we have an inverse head and shoulders pattern here. We had a small one here that gave me the buy signal. I didn't want to wait for the larger one to break out because it'd be a little more overbought, but again, we're looking for 112 on the upside, and it's got good upside. So all these sectors will work too in a volatile market. They will go down less than some of your big tech names. And here's National Retail Properties. This is one of the specific REITs I talked about. Again, an inverse head and shoulders pattern, but a huge consolidation going back 3 years or so. This had a 5% dividend on the breakout. I don't know, it's probably 4 at this point with the run up in price. So it's worked well. American Homes and Rent. This was a little dicier. It took a while to break out here. I'm using a ascending triangle here as my pattern instead of the inverse head and shoulders pattern, since this shoulder is so much larger than the left shoulder. But again, our price projection is 46, so we got a lot of upside there. This is something that you could buy today. So REITs look great. Before I get into crude oil, I do want to say, the sectors that I want to be in are healthcare, utilities to a lesser extent since they reach my price projection, uh, Reits, those are defensive sectors. I think there's some volatility ahead of us in the overall equity market. I'd be careful. This is crude oil. This is a massive pattern. Goes back 2 years. Hasn't broken out yet. I did make a bullish call on this on the slight breakout, but I warned that it wasn't a very substantial breakout and a pullback was uh, was likely. We didn't have any massive volume confirming this breakout. So we're still in this consolidation, but it looks good to me. At 75.54, my stop is at 70. And if this is able to break, let's say to 82 on a weekly close, our price projection is 148, which is massive. So uh, I'm building my position. Every day that it's up, I sell a little bit. Every day that it's down, I buy more than what I sold. So I get my position bigger and bigger at lower cost basis. Marathon Oil, this is one I initiated on back in April, I believe. And this is a symmetrical triangle, a big pattern, 2 years in the making. The bigger the patterns, the more reliable, the bigger the moves. And you can see where my stop is here. It's kind of had some fits and starts, but this has been stronger than a lot of the other energy names. So I continue to like Marathon Oil. And the price projection is 41.50 from 28. It's a big move if we get there, and everything looks pretty good right now. If oil prices go to 148, you better believe Marathon Oil. I did recommend this just before it got bought out by ConocoPhillips and had this big up week. So Marathon Oil looks great. And those are my buy recommendations. Please like and subscribe. I also send out intraday updates, which are actionable. And thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great Sunday afternoon and great trading in the coming week.